Hey, trading gang. I hope your day is going good. I hope your life is good. I hope everything around you is good. So here we are at another podcast of Matt Z at Optimus Futures. And if I can ask you for a favor, if you can please like it on YouTube. I'm putting effort, to educate you as much as I can and potentially make you a better trader. So if you can just do this one click, or if you're listening to this on YouTube, and at the same time, if you have a podcast that you can leave a comment or give us a good review, we'd really appreciate it. So I want to tell you a little bit about my father. My father is an engineer. He's been an engineer for, I would say, close to 50 years. He knows his stuff really, really well. So one day during our conversations, I said to him, well, does the engineering world change a lot? And he said, well, everything changed since I started. A lot of things have changed. I said, do you apply anything different today that you didn't do in the past? And the answer is no. So I was like, okay, so everything changed, but the way you apply yourself is not really the same. He said, well, the basics, you still apply the basics, right? Which the basics are always the most important. So everything around you changes. I assume the corporate world changed. I assume, the things he's working and the products and, the structure and the goals have changed. But, the core of engineering, everything that he studied 50 years ago still serves today as the foundation to everything that he's doing. And knock on wood, he's still in big demand because of his knowledge. He's getting up there in years, but it's still working and still applying himself. So how is it related to trading? So essentially, everybody has a certain idea of trading, when they start out. So over time, it changes. But just like my father had to basically keep up with the times by reading all the time and being always updated about the industry that is in, you have to do the same thing. So as a trader, you really never stop learning. Now, again, if you get the basics right, then it will serve you for the rest of your life as a trader. If you understand not over leveraging, if you understand risk management, if you take it seriously and you review your trades, if you start going into the psychology of trading. And again, like I said in other podcasts, I'm not trying to make you into a psychiatrist, but really understand yourself and being self-conscious of the things that you do, especially of bad behavior at times that you do, that would help you a lot. So being self-conscious of your own actions and how you react to market is a great thing to observe. Beginners, a time when they start out, they have a misconception about the markets, right? So they think that they'll find a method for all seasons. They think that this method will be consistent and they'll be able to apply it at all market times, which is really not the case. So when I tell beginner traders you will have to keep on learning about the markets all the time, I always emphasize that I don't ask them to study the markets always from day one as if they weren't trading before. The continuation of studying the market is completely different than and evolving as a trader is very, very different than starting from scratch all the time. So again, you get the basics right, and then you just have to evaluate the markets all the time. So I do it right now. When I analyze the markets, one of the things that I do, I basically analyze them in the context that they're trading right now, and that's very important. So the context and everything else that's happening around us, will determine obviously the direction of the market. So some of the things, just to give you an kind of a reality check of what you're really getting into. So basically, you have to get into the understanding the sentiment of the market, right? Is it a bullish market? Is it a sideways market? Is it a bearish market? You really have to start looking at those things at a very objective level. Now, when you start looking at it, there's always the people that are consistently bearish, right? They call them the perma bear, right? So they consistently, doesn't matter what the economy does, they will always find the reasons. And by the way, it's not that the reasons are not valid, they're not imaginary. They use statistics, they use models and everything else, but it doesn't matter what market conditions, they will basically, say that they are perma bears. And to be in that, I think it's a messed up state of mind, if you don't mind me saying it, because you have to be, as a trader, you always have to be flexible. If you always think things are going to collapse and you're always a perma bear, it will work against you. Same goes for being obviously always bullish, that you think the market, will always grow and will always go up. And right now there's this, this thing, that's tweeting all the time by some gurus, stock always go up. And that's also, a little bit of a bad mentality, despite the fact that we're in a bullish market. It's not a flexible state of mind, because at any point in time, things could flip. So what you want to do is really evaluate always the market sentiment. You always, not always, but you should understand, what drives it. For example, right now, we have a lot of younger traders that are joining the market because of the phone application. So clearly companies like Robinhood, which came out with a phone application. Now, I'm not talking I'm not evaluating whether it's a good thing or a bad thing. But I'm just saying it made it a lot more accessible to traders. And it's obviously changing the game, because in past years, everybody looked at, hey, what are the institutions doing? And right now it's like, well, retail obviously has some buying power as well. When you have millions of people, in our country and around the world can just buy with one click. Now, doesn't mean that they'll hold the market forever, but at some point those things can turn on us. And always, I just remind everybody that, especially when you trade futures, there's a substantial risk of loss in futures trading, and past performance is not indicative of future results. So again, a lot of people have phones. With one click, they buy. Those are simple apps. They just have a lot of buys and sells, not even a lot of graphics to analyze. And so a lot of what drives the market is basically, right now, I feel, is impulsiveness, especially with the social media and the forums and everything else. You also have to understand, what is fashionable when you trade, well, especially when you trade stock indices, if you're into E-mini S&P, micro E-mini S&P, and so forth. Now, believe it or not, there is fashion, meaning any changes. So what's popular today might not be popular tomorrow. And I look at it as a fashion trend, right? So one day they'll talk about something, and the next day, its stocks will go up, then they'll collapse. Nobody's going to talk about it after. So you really have to realize what is fashionable and what is not. I'll give you an example. So, back in the day when I started, one of the first crashes that I saw was in the .com era. And during the .com era, the thing that was fashionable was companies were evaluated on the basis of, well, how many clicks does it get? It wasn't the basis, hey, is there enough margin for everybody in this business? Is it worth the competition? Are the evaluations worth it? It was just fashion to say, hey, listen, I build a site to .com, I get 100,000 visitors a day, and that's what it is. Back in 2008, when we had the mortgage crisis, it was obviously an economy that switched from clicks to bricks. People over leveraged. That was the fashion. All of a sudden, clicks to bricks was the fashion. It was like, hey, you know what, this internet thing and technology, where it's at, it's really, so that drove a lot of the, I think back in the day, a lot of financial companies, bank stocks, mortgage companies, and so forth, high. So you really have to understand, what is fashion, and you have to be very careful at the time, right? Then that's the part you say, okay, you know what, this is becoming very fashionable right now. Everybody's talking about it, right? So, and I'm getting a haircut, and my barber and my hairdresser are starting to give me tips. Maybe it's time I should be cautious. And that's exactly what happened in 2008. Oddly enough, and this is a true story, one day I had to take Uber to work because my car was in the garage. And the Uber driver said, I said, what do you do? Because he seemed pretty young. I was just trying to have a conversation. He says, I'm a trader. I said, oh, it's interesting. What do you trade? He says, I'm a cryptocurrency trader. That was during the time right before the major collapse. It was the same thing. Everybody was on the phone. That was the fashionable thing to do. Everybody says that, Bitcoin will solve all the problems of the world. And then it just tanked. So you really have to just kind of watch, along. I think it goes hand in hand with sentiment, but also see what became all of a sudden, kind of fashionable. And you know what? Honestly, this is where your bullshit, filter and sensor can go up. You say, okay, this is bullshit. When a guy out there is driving an Uber and tells you he's a trader, then something is wrong with it. So, you have to use sometimes simple clues like that. I mean, to me, it was just funny when I got out. I was like, you know what? They're just going to collapse this whole thing. And it's not because I have a crystal ball, but that's just the reality. And I'm not happy that it collapsed. I'm not happy that people lost money. I'm just saying people essentially, they're driven by fashions, and they see what's popular, and I know some people call it greed, but I prefer at this point at least, to say some of them just, trade according to fashion. In any case, going back to what happens with experience and what you should look for is really to see how you perform during certain periods, right? So part of your education is basically to evaluate your performance. How do you do during this time? Are you more successful that you can trade more frequently? Are you less successful? You have to deleverage your positions, or maybe the typical leverage that you use could be fine for the market volatility. So remember one thing, your job is never done as a trader. You want to continuously evaluate everything you're doing, analyze the markets, analyze how you trade in the markets, and whether this thing is appropriate for you. One thing you will realize over time, which it really takes a very long time, and I assume this has happened somewhere between the 5th to the 10th year of your life as a trader, you're starting to realize what's fiction and what's reality. You're really starting to understand, I hope I should say, in my opinion, you're starting to understand the pulse of the markets, right? You're starting to understand what the market, how it behaves. You're starting to understand all the media and the hype around it. And you're starting to understand how it all sounds the same. You're starting to understand that the analysts that come on TV, they just come on TV and they promote things. And they talk about, the markets tomorrow and what the markets will do, as if they have some sort of a prediction model. And as I said many times, listen to my other podcasts, you will realize that, we're not in the business of predictions. We're in the business of analyzing and managing risk and taking decisions. But anyway, you will stop listening to that. You will also stop, chasing education out there, right? When you are starting out, you're thirsty for a lot of education, and then you start seeing, that all of a sudden all the educators use the same copywriter, do you want to trade once a week and make a fantastic trade? Do you want me to teach you the perfect setup? And you're like, okay, I'm tired of this BS. I'm better off studying by myself. So somewhere along, in the 5th to the 10th year, you start learning a lot about market behavior, cycles. I think even within the first 3 years, I mean, again, I have to say past performance and indicative future results. I didn't make a study, but I think even every 3-year cycle, you will see that there are days that are really, really bad, and they're very, very devastating. And, you have to go through those days to see. I don't want you to lose money on those days. Of course I don't. But, what I'm really trying to prepare you is that if you have the right position sizing, I hope that this doesn't devastate you. That's all I can say. Sometimes the markets have big, huge moves, and they can take out even the biggest of players. We had a move like that in February 2018. I remember the market closed at somewhere around, closed at 4:15 Eastern time. I think it was February 18th, if I recall right, 2018. But I don't remember a specific date in February. But remember the S&P closed at 4:15 Eastern time, and then it reopens again at 4:30. And I think within those 15 minutes, I think the gap was 1,500 points on the Dow, and I remember it was a few hundred points on the S&P. And it happens sometimes. Sometimes it happens because you had a guy who just placed a market order on 50,000 in mini S&P. Sometimes it could be HFT. It could be, the bottom line, the reason is irrelevant. That's also one thing that you will learn, that after something happens, everybody's trying to kind of analyze, why did it happen, and everything else. And in reality, it really doesn't matter. What you have to do is really be positioned right, watch the markets all the time, and be on alert, because it can happen anytime. Now, I don't mean to scare you, but I'm just want you to be, attentive to your trading. And again, I'm going to tell you again, the reason for it are absolutely irrelevant. Like, just to use another example, so not long ago, the crude oil went negative, right? So it started a debate in the industry, right? It started a debate. The CME, Patrick Duffy came out and said, this is what supply and demand looks like. The market action that day was exactly what, was supposed to happen. And then you have other companies who came and said, no, this is because of your malfunction. And now there's a company I think they're in England, I'm not sure, but they're being investigated because they made like hundreds of millions of dollars that day, right? Essentially, anybody who lost on this day, it's irrelevant to him whether it was the English company that caused this disruption, whether it was a malfunction of the CME, or whether it was really justified because of supply and demand. It's irrelevant. When it happens, it happens. And so, a lot of traders are always, in days like this, they're trying to read and understand what happened and everything else. So as you grow as a trader, you will understand that it's irrelevant. Yeah, it might make a good conversation with your friends, and if you sit down and for dinner and you just shoot the breeze and you say, hey, you talk about the markets, hey, did you see what happened? That's interesting. But it has zero relevance to your P&L. Your P&L, if you're over leveraged, if you didn't pay attention, if you saw this, this activity and you didn't get out, you will pay the price. This is why I'm saying, goes back to my previous point, that as a trader over the years, one of the things that you should evaluate and learn is how do you perform in different environments. And, basically the example that I used before with my father, I said your basics of risk management, or your basics of what you studied is, you might be a doctor, you might be an accountant, you might be a baker, you might be a garage guy. It doesn't matter. The basics, if you master them right, everything else will change. But you will keep, but your basics will serve you as a foundation, for the rest of your trading life. So again, one thing that I want you to take out of this podcast is not to be scared to grow as a trader. It does not entail, learning trading every single day from scratch. That's not what you should do. If you mastered, if you appreciated the market from day one, if you really realized what risk management is all about, if you realize that you need to be to trade at a certain size, that you have to be attentive to your psychological behavior as well and how you trade, that will, if you mastered it in the first few years, it will serve you as a foundation. It's you know, well, let me just digress for a minute. So, I spoke to, and I'm going to go back to my main point. So, when I talk to people, some of them say, I really like your podcast. I didn't realize the trading is so hard. And what I tell them, rock is hard. A rock is really hard. You can't walk through a rock. But trading is challenging. That's what I call it. I don't call it hard. I call it challenging. So, you have to have this consistent, drive to overcome the challenges that are in the market. So again, the foundation that you will have will serve you as, I hope, like I always say, I hope, because, I think some people will take trading very, very seriously, and some unfortunately will not. Sometimes they'll go trade a little bit, then they don't trade a little bit, then they trade, then they take a break for a few years and they come back. And I'm not judging, but, sometimes life, family, whatever stands in the way. But the reality is that the more consistent you are in learning the markets every day, the better foundation you will have. And the challenges of the market, you will be encountering them with more depth. Right? You will be encountering them not as a newbie each time, but with a lot more depth and understanding. So if you trade through things and you have some, bad days that the market collapsed and the market, went up the next day, you're not going to be one of those, I got to know what happened. Because every time it's different circumstances. After many years of trading, you'll say, yes, those are bad days. I know how I should act in days like this, whether I should trade or not trade, if my method, I can react to this market or not react to this market. So again, going back to what I said before, as you grow as a trader, you will find new challenges in the market, but because you have previous experience, you could potentially encounter it in a better and better way. And so if you have those points, to yourself on a daily basis of everything that I discussed here, going over the markets, understanding how you react to the markets, it will serve you. One thing I would tell you is this. At the end of this podcast, this is what you should do. You should really think if you are on a scale of 1 to 10, especially I'm saying it to all the futures traders out there. We are a futures trading company, so, a lot of those things that I'm talking about are important in every asset class, but I think especially when you use leverage, like in futures, it's a highly leveraged instrument. So, you put $1 and then you play with $200. So, depending on the day trading leverage. But the point is that, you put a little and you control a lot, and it entails a lot of risk. So what you should do is basically write down where you're on a scale of 1 to 10, whether you're a very conservative or you're a very high risk person, right? And I'm going to tell you something. I don't believe that there is 1, and I don't believe there is 10. I believe it could be closer to 1, and I think it could be closer to 10, because I think 1 is just completely like, no, trading is not for me. If you say on a scale of 1 to 10, I'm conservative at 1, then drop trading right now. If you go 10, I have the highest level of risk, then then it's just complete reckless behavior. I hope that you're somewhere close to 10 if you have a lot of experience, and you're somewhere between, I would say, 5 to 3, if you're trading futures, because you can be very, very conservative if you approach this market that way, because you'll have the fear of trading. But anyway, once you decide where you are on that scale, and everybody is very different, what you should do is write down, okay, what skills do I have to hone down right now, and basically what skills I should work on right now as a beginner. If I'm a beginner, this is the skills that I'm going to work on. I'm going to work on my discipline. I'm going to work on my education. I'm going to work on risk management. I'm going to evaluate my trades. I'm going to go over my trades, right? And then try to look in the future, say, you know what, if I was to memorize all these skills right now, let's say I'm 5 years down the road, right? I'm just 5 years down the road. How do I apply those principles then? How do I apply what I've learned here right now, in the future? How do I apply them, once I go and I see all the market volatility and everything else? And it gives you a routine, seeing, how you apply basics in the future each time gives you a routine, and it builds habits for you as a trader. So anyway, I went a little bit longer than I anticipated, but I hope it helps you. My goal is really to help you as a trader. I respect you a lot because I know those of you who trade come in every day and you take risks in the markets in order to gain. And as a broker, I never forget that, my customers, we are earning a living in the company because other people are taking risks in the market. So I want to give you everything that I possibly can for myself, and not just take business, but, also give back a lot of soul into what you guys are doing. So I hope you'll call us. We're looking forward to hearing from you. We hope to grow with you as traders, but we also want to earn your business. You can go to www.optimusfutures.com. You can call us. You can look at the platforms. We have our own platforms. We have other platforms. We have mobile platforms. We have all the technology in the world to serve you. And we're also here not just to say, hey, that's what we have. We're also here to help you with choices as far as the markets you want to trade, the platforms you want to have, and the tools you want to use for your analysis. So go to optimusfutures.com. Reminding everybody again, and I'm saying it right now all the time, and you're probably used to all those disclaimers and everything else, and probably you say to yourself, yeah, I know there's risk and blah blah, but just remember this, okay? There's a lot of logic in the disclaimers that I say, because they're also trying to tell you, to use caution and risk management, and to tell you, hey, whatever happened yesterday, you still have to do your homework, because it doesn't mean that it will happen tomorrow. So having said that, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. I wish you well, a great day and a great week, or whatever is left of it. And, always keep smiling. Take care. Bye-bye.